I'm sure that our students are, already ready with their questions. So let's, I think, without wasting any more time, we'll just start off with the whole process, right? With the permission of Dean ma'am. Okay, right. So let's start off and looking forward to a very, very enchanting experience. Um, First of all, a very, very good morning, I think, to each and every one of us. And from our side, it is definitely a pleasure that we have such great panelists with us today. The Finance Minister, Shrimati Nirmala Sitharamanji, presented her fourth budget on 1st of February 2022. And this is the second paperless budget presented by the government in view of the ongoing COVID-19 pandemic situation prevailing in the country. Um, well, as the country prays for a sharp rebound and strong economic recovery, we shall try and dig deeper into this year's budget through a panel discussion on Decoding Budget 2022 with our very, very special guests and a panel of guests, in fact, who shall help us understand the impact of the budget on the Indian economy. And वैसे तो I think this is the right way of taking things forward. So it's said that light symbolizes brightness and prosperity and helps give a new direction to life. And with this noble thought, we shall now first initiate the lamp lighting ceremony.
Very happy Basant Panchami to each and everyone present here. And I think it's a very auspicious occasion to light the lamp today. And let's pray to Goddess Saraswati also.
Yes. Right. So now let's take things forward. And the first part would be introducing our panelists for the day. Our first panelist for the day is Professor Anurag Agnihotri. And Sir has been working in the Department of Commerce, College of Vocational Studies, University of Delhi since 2007. And he has done his graduation and post-graduation in commerce. And he holds an LLB degree. And he has completed his MPhil from Madurai Kamaraj University and has been awarded his doctorate in the area of risk management from Mahatma Gandhi Kashi Vidyapeeth. And his areas of specialization include international financial management, security analysis and portfolio management, derivatives, and financial risk management. Sir has supervised 256 research scholars and has multiple research papers and paper presentations to his credit. He has authored 5 books till date, and uh, he has conducted many management development programs with middle and senior level management. And his research report on demonetization was acknowledged and appreciated by the Ministry of Finance, Government of India. As a member of the executive team of several institutes and university committees, Professor Agnihotri is deeply involved in driving organic growth. We welcome you, sir. A very, very warm welcome from our side, sir. Right. Then the second panelist for the day is Professor Surendra Kumarji. And Professor Kumar has been working in Department of Economics, Delhi School of Economics, University of Delhi since 2015. And he is an MA in Economics from Kurukshetra University. He has completed his MPhil and PhD in economics from Center for Economic Studies and Planning, Jawaharlal Nehru University. He has worked as a director acting at the Agricultural Economics Research Center, University of Delhi. He has also worked as a professor at Department of Business Economics, University of Delhi, and Terry University, New Delhi. He has been a consultant for organizations such as the National Council for Applied Economics, um, and it has also been he has also been a part of the World Bank Institute of Economic Growth. Now, these are just few of the organizations that he has worked in the capacity of a consultant. And he has been awarded multiple research grants and has been on the editorial board of research journals such as Economics of Disasters and Climate Change and APN Science Bulletin, to just name a few. Sir has presented papers at multiple conferences and has authored 5 books and published numerous papers and articles in journals and newspapers. And he has authored around 13 chapters in edited books and has been a research supervisor to 5 PhD scholars and is currently a member of the Indian Econometric Society and the Indian Society for Ecological Economics. A very, very warm welcome to you, sir, as well. And the next panelist for the day, that's the third panelist for the day, is Mr. Bajaj, who's the founder of ABA Advisory and is a tax and litigation expert and a corporate consultant. And he has completed his Bachelor's of Commerce from Deen Dayal Upadhyaya College, University of Delhi, and he studied at the Institute of Cost and Works Accountant of India from 2004 till 2009, and he's actually completed his the Chartered Accountancy from the Institute of Chartered Accountants of India. And he's completed his LLB from National Institute of Law and Technology. Mr. Bajaj has worked with Ernst & Young Private Limited, Garg Juneja and Company Chartered Accountants, Diwan P. and Chopra and Company, to just name a few of them. And he's worked as a senior consultant at FIITJEE till 2017. He has a vast experience of over 15 years across tax, regulatory, and ancillary areas comprising of domestic and international taxation, search and survey proceedings, tax restructuring and planning, serious fraud investigation proceedings, prosecution proceedings, and representation before various appellate authorities. A very, very warm welcome to you, sir, as well.
Thank you.
Okay, right. Thank you, sir. And the next on the panel is Mr. Avidesh Nagar. And Sir is the founder and director of Moneylogist. And he's completed his bachelor's in commerce from Sri Ram College of Commerce, Delhi University. He completed his MBA in finance from University of Delhi. He has also done a diploma in business finance from ICFI, Hyderabad. And he's a very, very experienced relationship banking and finance professional with a focus on numbers and results, and has excellent knowledge of economics and business related matters. He's held he's actually kind of worked on numerous teams of relationship managers and has handled complex products and transactions. He has successfully created new businesses, and he has to his credit the art of developing new products and establishing them into successful businesses. His strengths include his ability to manage client relationships, analyze project finances, structure transactions, and provide financial solutions to his clients. He is known for strong analytical skills and solution-based approaches. A very, very warm welcome to you, sir, as well. Right. Then for the moderator, we come to the moderator for the day, and the moderator for the panel discussion will be Dr. Vinay Khanpal. Dr. Khanpal is an honors graduate in commerce, and he's done his MBA with dual specialization in finance and marketing. And he holds a PhD in management from the Department of Management Studies, Kumaon University in Nainital, and is currently pursuing DLIT. With over 16 years of experience in academics, he is currently working as an assistant professor in Department of General Management, School of Business, University of Petroleum and Energy Studies, Dehradun. He has published 60 research papers and presented papers in national and international seminars and conferences, such as at the IITs and the IIMs. He is a member of All India Management Association, Indian Accounting Association, and Indian Commerce Association. He has numerous awards to his credit, including the 100 Most Dedicated Professor Citation Award given by the World Education Congress, CPS Ambassador for Peace 2018 Award by Center of Peace Studies, Sri Lanka, and Amity Excellence Award for Best Faculty in the area of infrastructure financing. A very, very warm welcome to you, sir, as well. Right. So now that we are done with the introduction part, we can now formally start off with the process of opening up the panel discussion. So I would now request Dr. Khanpal sir to please take over and officially open the panel discussion. And as discussed and with sir initially, I think that once the pointers have been discussed, and there will be pointers, 9 of them in total, and these pointers will be put across by Dr. Khanpal sir, and they will be open for discussion with our esteemed panelists. And once the pointer has been discussed, we will be open for questions coming in from our students and faculty members. And I think that they can always raise their hands so that we can have their questions on board. And the process of unmuting the faculty members or the students will be initiated by our student coordinator. So not putting in any extra time in discussing from my side, I think I will now allow our guest to continue. And over to you, Dr. Khanpal, sir.
Just before Dr. Khanpal actually commences the discussion, a very, very warm welcome on behalf of Vivekananda School of Business Studies to all the esteemed panelists. It's a great moment, and I would like to extend my deepest sense of gratitude to Professor Surendra Kumar, to Dr. Agnihotri, to Mr. Anil Bajaj, to Mr. Avdesh Nagar, and Dr. Vinay Khanpal. You've been very, very kind to spare your time, because I'm sure with your eminence, you're constantly on the calls, where people seek your opinions. So, all of you having spare time together to come to us and address our students. And, we've actually shared a couple of pointers with all of you. So we really look forward to a very enriching discussion. And I'm personally very, very thankful to all of you for sparing your time, for consenting at one common time to be together. So looking forward to a very rich interaction. And on behalf of VIPS, I extend a very warm welcome to you. And we really look forward now. We know that institutions are opening up. So very soon we look forward to hosting you on campus and felicitating you and expressing our gratitude and our honor that it's a matter of great honor for us to have you amidst us. So thank you so very much. As the Dean of the Department, I extend a very warm welcome to you once again. And over to you, Dr. Khanpal now.
Okay, so good morning, everyone present here. So wishing you all happy Basant Panchami and Saraswati Puja. And so I hope on this auspicious day, some fruitful output will be there. Esteemed panel here present. So as we know that the finance minister presented a budget on 1st Feb, and the main stress area was the inclusive development, productivity enhancement, energy transition, and climate action. So I will start the panel discussion with the points. Wait. So first point is on the takeaways on the sector-wise allocation in budget. So first, I would like to have a view of Professor Surendra sir on sector-wise allocation in budget. Can you highlight the key takeaways?
Okay. So thank you so much for having me here. And rather than talking about the sectoral allocation, let's first try to understand this background of presenting the budget in this year. This year budget is presented in this background, inside and outside. Those points we need to take on board. First is that on the inside, after having a substantive decline last year. This year we have tried to recover. But when we are talking about this recovery, and when we are talking about we are at the level of pre-pandemic levels, here counterfactual should not be just the pre-pandemic levels, but if this pandemic was not there, then what could be the situation? And if we compare with that, still we are at a lower level, and it may take many years to recover that what we lost. This we need to understand. One. Second point, as far inside story is concerned, when this pandemic started, that time people needs some kind of sport, immediate kind of sport. But now this is the third year in the pandemic we are, and still there are uncertainties. And when we have a long-term uncertainties, then the question is how the people take this off, whether they take it a permanent kind of income effect or a transitory kind of effects. And I believe when we are in the third year, then people will take it's a permanent kind of scope. And rather than responding to, you can say, this immediate kind of assistance, they want some kind of permanent income effect in that. Means, for example, say job kind of situation they want rather than this transitory benefits in that. This is, we can say, a couple of points about inside story. But simultaneously on the external front also, on the external front, if we try to see the background, and at that background what we see, that now we have the fear this Fed is going to opt out this easy money kind of situation. Most probably this next month onwards they may take this easing out, monetary easing out kind of situation. So as a result, in these financial markets, there are the question that this money will outflow from the country, or those kind of tapering situations may affect us. On the other side, these commodity prices, especially the energy prices and metal prices, they are increasing. How they will affect? And thirdly, what we can say, this current account balance, this current account deficit is also has widened about 2% of the GDP. This is the background in that. If we try to see in this background, and then we try to relate what the intent proposals, and we can see this matching allocations, what you are so talking about, the sector allocations, means what is the intent behind, what are the proposals, and what are the matching allocations. In that context, if we try to relate with this, the sources of growth, as in our standard productivity growth literature we used to see that, there what we see that this sources of growth, it mainly we can say at this point there are the two things. One, this employment growth questions, and the other is the productivity growth. And productivity growth is mainly driven by, we can say, this capital intensity, total factor productivity, and we can say this quality of the labor. These are the factors in that. And in this background, this prevailing conditions, this how to analyze it, this theoretical conceptual framework, as I'm talking about these sources of growth, employment and labor productivity growth, capital intensity, how we are able to increase it, labor quality, how we can increase it, and total factor productivity. Given this kind of background, what we can say in this year budget allocation, one, this allocation we can say for capital expenditure. And as no one can miss out that it is substantial increase, and given a high base also, this is the thing. And here what we are trying to say is that this, you can say, around 3% of the GDP, 2.9, something like that. And then assisting the states also, or encouraging the states are also with some conditions to put their money into capital expenditure. As a result, this expenditure may be around 4% of the GDP or so. That kind of allocation is done for the capital expenditure. So when we are talking about this capital expenditure, and here again we need to understand that in Indian conditions, generally this public expenditure and especially this capital expenditure, that not crowd out the private investment, but it crowds in the investment, private investment, and this private investment which is already in a sluggish situation, and this private consumption is also low. In that situation, it makes sense to put substantial money that not only create immediate demand in the economy, but also create a base for future growth and also bring competitiveness in the economy. So that we can say this capital expenditure is supposed to achieve these objectives, that will create a substantial capacity in the economy. It will create competitiveness, and also because when we are investing this money in the capital, when we do capital expenditure, so it's supposed that it will create demand also, it will create employment, it will create demand also. So this not just to giving this direct money to the people, but investing in infrastructure, that make more sense for this long term growth perspective. This we can say. And then when we are putting this money, from where this money is coming, that question is arising. And from that perspective, if we see this in last year, this the year that is ending 2021, sorry, 21-22, this fiscal deficit is around 6.9% of the GDP. And in this proposed budget, we are saying this fiscal deficit is going to be 6.4. So here we are doing this modest, we can say this fiscal consolidations, but we are not giving a, we can say the complete path of what last year this finance minister said, that 25-26 this fiscal consolidation or fiscal deficit will be around 4.5%. So it's better for this long term perspective, not just that this year we are going for this modest consolidation, but we should, it's better to spell out the complete path so that it bring more certainty in the market. Okay, so when we are talking about such kind of modest fiscal consolidation, and we are talking about, sorry, or when we are and we are talking about this capital expenditure, which is seeing this growth enhancing in that situations. But here we should also understand we are living in an environment of uncertainty. At present, we are having this third wave, which is somewhere waning, but still we can't say that we are out of the crisis. Some uncertainties are there. So it makes sense to have some kind of cushion for that. And this finance minister also tried to keep that cushion with her, in the sense that when she is projecting these revenue receipts, and there, if this economic survey says that this next year 22-23 the growth will be around 8 to 8.5%, and this nominal GDP growth is projected for this revenue received around 11.1%. So in that sense, what this finance minister is assuming that the inflation will be around 3%. Okay, but this ongoing figure shows that it's better, rather than having this 11% nominal GDP forecast, it should be 14%. But having this law, that is giving the space to the finance minister, if there is any kind of further uncertainty or problems, the money can be allocated for them. For example, say at present this Manrega expenditure, this demand for Manrega is quite high, and if this still such kind of demand persists, or if suppose there is further this fourth wave, or if we need the more money for the vaccinations, that can be provided. That kind of scope we are getting, but simultaneously there is a cost of that. It's not cost free, and that impact we already may realize in these bond markets. And in the bond markets, these yields are increasing. That some way it's implying that if government is trying to have the money, means this budgetary allocation is doing in this way, that may impact the money available to the market. Okay, and this as allocational part, the second part, in when we are talking about this TFP part, total factor productivity, in this budget or this intent or these proposals when this finance minister was making. So here, when we are talking about this digitalization of the economy, I'm not going into details. And when this government is also talking about simplification of the rules, so in that sense, what we can say, all these measures, they may help us enhancing total factor productivity in the economy. And lastly, what I can say is that because at this Glasgow meeting, COP26, we make certain announcement in that, certain commitments we announced. Okay, so to meet those commitments in this budget, there are certain provisions that help us the economy or showing us our intent to go for a green economy. So in that context, we are talking about this green bonds, we are talking about circular economy, we are talking about this, you can say, green mobility, when we are talking about taking these batteries as a service. So these are some of the parts in that. But on the negative side in the budget, what we can say, that this competitiveness of an economy, it's always linked to how much open you are. And that the results in last 30 years we might have realized in that, when we are becoming more open, so we are becoming more competitive. But in last few years, there is reversal in that, and still in this budget, rather than going for competitiveness, in certain sections these customs duties are increased. So in that sense, those are some of the negative parts in that. So I stop here at this point, and if need, will come back.
Yeah. Thanks. It was nice be presented. So I would like to go on to Professor Anurag for his views or his takeaways from different sector-wise allocation. Yes, sir.
Dr. Khanpal, are you there with us right now?
Yes, ma'am. Dr. Anurag, can you share your views on the sector-wise allocation?
I think there is some technical problem at Sir's end.
So next we can move to Professor Mr. Avdesh for his views on sector-wise allocation. Mr. Avdesh?
Yeah,
Yes, sir.
sorry, there's some issue. I'm not able to open video. My not very familiar with
No,
this, and
no
settings
issue.
are not there. So, see, I just I can give a overview of this and what is the intent of the government and what government wants to do, and then I can come to the sector, which are the helpful for. See, this budget sends a very clear message, nationally and internationally. Okay, that government has taken very bold step. It has not been populist. It has not taken any populist measure. In fact, and has gone ahead with a blueprint of next 25 years for the economy. Okay, and they have used this COVID as an opportunity. Now, if we look at the physical deficit for a country like India, for which government is saying it's 6.4%. Now, pre-COVID era, we used to have physical deficit of something like 3.5%, 3.6%. So it means 3% of GDP government is going to get financed mostly through the debt. It is through the debt, which government is going to get finance. So there'll be huge government borrowings. I mean, last year was exceptionally as a huge government borrowing, but it's not going to come down very significantly as well this year. And as Professor Surendra said, that's the reason bond yields are going up. But the message is very clear. We are not bothered about the rating agencies, because the physical deficit is something where the international rating agency will first come and pounce on you and say, "Oh, this is not we like. We'll downgrade you." So no botheration about the rating agencies. Okay, no botheration about the opposition politically, because there's no populist measure here. No new subsidy has been given. No tax concessions has been given, and all this kind of thing. Okay, so it might sound very arrogant on part of government, but what they have done is what is good in long run for the country. So they have increased capital expenditure by 35%, which is huge jump. Unlock about 7 lakh crore is the capital expenditure which is going to happen. Now 7 lakh crore capital expenditure, and most of it is allocated toward infrastructure, housing, uh, building capacity building uh, in the country. Now these are the multiplier sector. Housing is a multiplier, is an employment multiplier. So if you spend in housing, there are the employment creation is much faster. If you spend in infrastructure, the employment creation is much faster. And this give employment to labor, semi and low skilled worker also. So that's the intent of government. Government wants to. These people are the mostly hurt during pandemic. They have lost the job. They lost their kind of earning potentials, and these are the sector which will be helped with this kind of thing, with the by fueling economy by spending more on the infrastructure, as well as all kind of infrastructure and housing. Now, a very important part when government announced was the Gati Shakti, PM Gati Shakti project. Now, what they are trying to say here, infrastructure doesn't mean only road and power for them. There's going to be huge spending in the water sector. So there will be linkage of river. They already announced linking of river in central India and South India, 5 of them. So there will be linkage of river, and there will be water transport improvement. Now, water transport will cost you probably half of, or probably less than that, of a road transport or a railway transport. So if infrastructure, if government creates water transport infrastructure, the cost of transportation and moving of goods is going to come down. So that's an important point to see, that how a creation of water infrastructure will aid to the country. And apart from that, the other sectors, there are certain duty cuts and all, which briefly I can talk about the sector which will get benefited. Startup ecosystem has been pushed by giving additional money. Government has extended scheme of CCG, that was a corporate guarantee on the MSME and corporate sector loan. Now that is going to give further push to corporate, because they were expecting this scheme to stop, but this has been extended for 1 more year. So in the bad times of COVID, that scheme will again help the businesses to work further. Apart from that, the couple of duty cuts, tax process has been simplified, but no sort of leniency on the tax. Duty cuts, duty has been cut on steel scrap and import of electronic items, something which are important for manufacturing in the country. So if you look at that, government has tried to push the infrastructure for job multiplication, and government other hand has tried to push the manufacturing in the country. There are the production linked incentive schemes which have been announced, and so government's trying to manufacture and export. That will bridge our current account deficit. We are already doing fairly well now on the current account deficit part, but that further has been bridged. There are many sectors which have got benefit. I really can't talk about each of them and how they benefit. So my intent here to give overview is just the intent of government is this, and this project will help in job creation. The pandemic has affected all of us, but probably this is a great opportunity for our country. We are the one who can push the manufacturing. We will probably be the fastest growing economy among the large economies. I'm not talking about the small one. Among the top, say 5-10 economies of the world, we will be fastest growing economy in next 25 years, probably. So that's what the budget is trying to do. So that's my take here, and I would now transfer this to.
Okay, thanks for your views, sir. So next can we move to Professor Anurag first, in case he is linked. Professor Anurag, sir. Okay. So
Okay, till he actually
yes, ma'am.
yeah, till he joins, we're just waiting for him to join back. He had some connectivity issues. I had a small question, and this is to Mr. Nagar. You just spoke about current account deficit, and and you said that that has improved. So, can you just kind of differentiate the significance of both current account and capital account deficit, and what has been the situation for the country till date, and how does it plan to be impacted by the budget in the future?
Yes, surely, Doctor. Indra, no, this current account deficit is basically, our uh, kind of balance of payment and kind of situation, what we import and what we export. The difference between that. So, I remember that almost 5 years back or 6 years back, used to have a $10 billion quarterly current account deficit. It has still remained the same figure. In fact, we last year at the time of pandemic, we were current account surplus country. Which is unimaginable for a country like us, because we were actually we were in the lockdown, and we were not importing oil, and oil had once gone to negative territory also. So oil prices had come down and gold prices not risen. Basically, we import gold and oil. That's the biggest import which we have. Okay. And we are not using oil, so oil prices had crashed, so there was no import of oil, and gold also we were not importing too much. So that's basically the current account deficit, and that is manufacturing. What happens if you are able to manufacture and export? Then your revenue in foreign currency is higher. So if your revenue in foreign currency is higher, your current account deficit will further come down. Great.
Right. I think we have Agnihotri sir with us again.
Sorry, my apologies to one and all, and especially to Dean ma'am. And my net or device has malfunctioned at the same time when you called my name, and I was trying to unmute myself. And what has happened, I don't know. Then I gone to another room. I pick another laptop.
Thank you so much for taking all the effort to be there, sir. Thank you so very much. But yeah, the question is still in the process, and we still need your insights on the question. Now, Mr. Khanpal, please, your question again.
Yeah. The question was your views on the sector-wise allocation in budget. Yeah. Yes, sir.
Thank you, Khanpalji.
Yes, sir.
See, this budget, when you see Nirmala Sitharamanji, when she presented, it is not that fancy budget which we are used to see, where there will be some concession to the lower middle class, some tax exemptions, some standard deduction will be increased, some deductions will be available to the industry, etc. But rather than some infrastructure or I will say basic steps has been taken by the government, and whatever the government was doing earlier, which Surendra sir has pointed out, because after that I'm not able to listen to other panelists if they have spoken. So only those steps has been pushed forward by the government. For example, one point which Professor Surendra sir also pointed out, that is the capex. The capex has expanded by 35.4% approx. I hope I'm not recollecting exact number. So which is 5.54 lakh crore rupees comes out to be. Now this is a very big boost to the infrastructure. Then Gati schemes, PM Gati schemes which have been started. SCJ project has been started by the government. And then emergency credit line guarantee scheme which have been extended to the MSME, because MSME was a sector which was most leaded sector during this COVID-19. Why? India is going through a K-shaped recovery. It is not a normal recovery like this. It is a K-shaped, where the economic institutions, companies, and the individual who were above the bar, they have grown very fast, and which were below the bar, they have gone down further. So this emergency credit line guarantee scheme will going to ensure that MSME can get new funds and they can start up new projects based on that. And they will be able to provide the employment, because today employment is the key for the government also and for all of us. So this is going to start a big way, I hope. Then as just I joined now, then one panelist was saying that our current account deficit was positive, and that was good for the country. So growth in all major economies has been strong, withstand a lot of challenges. Our stock market is a new high. But is it the challenge for the government was not to increase the fiscal deficit also? Why? That challenge is very, very eminent, and that challenge is very, very, I will say, realistic in front of the government. The reason is, since 2008 subprime crisis, we are having the easy money into the market. Now with the very high inflation, Fed is going to reduce this easy money. And when that money is going out from the Indian market, and that will having a trouble on the Indian market and otherwise also, then the government has also this productivity link bonus that is also going to be very beneficiary for the government by the industry. And then one more point I would like to say, because the government is trying to put in the money and streamline the processes. This budget is more about the streamlining the previous budget deficit. So for example, LTCG, the cap on LTCG has been put, which means now you need not to worry about that, okay, this asset class with this much and this asset class with this much. And then on the dividend on the foreign assets which you are getting, that was taxed higher. Now that will be the same. So the government has removed any variation if it is coming from the overall system. So that is again, I hope it is good one by the government. Government has removed the duties from the chemical sector, and that is going to give new jobs in this particular sector. Custom duty exemptions have been taken care of from the, I will say that from the this particular MSMEs, and then new startups. The most important part of this particular budget was, which is going to go through the give a boost to economy. That is a startups is now will not be taxed for 3 years. That is extended for 23rd also. So startups will be there. And one thing, it is point for the students only. See, the growth of country lies in the unicorns. The more unicorns you will have, the growth will very high. We have seen during this particular period, a lot many companies has come up and who has started and who has got good IPO. So this particular schemes has been in income tax, the tax exemption holidays has been extended by them for them. The government has revoked custom duty on stainless steel, and also now steel scrap, which will going to again have the MSME sector. This is another good point is going to be. Now, the one more point, which is a unique, which the government was working on since last 2-3 years. I was associated with RBI with some project. So RBI was wanting to come out with a digital currency. So we are going to have a digital rupee based on the blockchain. And why it was necessary? Because you cannot stop the new technologies. And if you're not giving anything in India, we have to go to other places. And the government has put the 30% tax on the digital currency or cryptocurrencies, profits and tradings. That is also a welcome step because the regulation is very much important. of any asset class. Because if you see the cryptocurrencies trading, one day they are 200% up, another day they 200% down. So that is another good step which I feel by the government. Then another problem of the India is housing, and in this the government has given 48,000 crore for the PM Awas Yojana. So these 80 lakh houses are going to be a very big benefit to the poor, because if they get these houses, the problem of housing up to a certain extent will be overcome, and that will give the boost to the infrastructure and the housing sector also. Yeah, there was some disappointment on this, that if the government would have increased the section 24 to exemption, would given a smile on the Raman's face also, Professor, because then housing loan exemption will be there, huh? But that is not there. I was also hoping that, and even I have said to various platforms that this time I hope that the government is going to increase the standard deduction and housing loan schemes. So existing academic institution, urban planning will be designated. So excellence and endowment fund of 250 crore. Now this is a step which we academicians should welcome it, because that allow us to do research and to suggest the industry many things, whereby our contribution to industry will be increased in that way. So MSME and startup 6,000 crore program MSME will roll out in 5 years. So which means MSME is the main job provider. That is what is going to be the focus for the government. Udyam, eShram, NCS, Asim portal, they will be linked all together, because see, this budget is about streamlining. So what they are doing is they are linking all these portals, because now we are doing one project on this portal, then another on this. So if these three can link, that will be good for the country and for the then PE and venture capitalist. You ask them that you can exit early also, which means you need not to give higher income LTCG. So they will be more interested now putting in the money. Okay, so I'm not taking too much time now. Thank you. And any discussion part you want to know the questions, that I will do it afterwards. Education I will only talk about one thing on educational, which is the digital university the government is coming out. This will be a very big advantage in the rural areas, in the areas where good universities are not there. It will be helpful to those who wants to continue their education even after the job, like the defense forces, paramilitary forces people. Few people leave their jobs or studies due to the lack of money, and then they join the jobs and they want to study. So this university will be a good step in that field. Thank you. That is all from my side. I would like to listen others also. So Kanpal Saab, you want to ask anything after that?
Sure, sir. Okay, so next I would like to have views of Anilji on a possible tax implication of this sector-wise allocation. We have sector-wise views from our three panelists. So can you brief about us about the tax implications of this sector-wise allocation? Yes, sir. So are you sharing PPT?
Mr. Bajaj, you can hear us? Hello?
Hello, sir.
I think there is some technical glitch, maybe.
Yeah. So can we have queries from students in case? Okay, Anil sir has
I think
joined.
he's back.
Yeah.
I hope we are audible to you, sir, Mr. Bajaj.
Yeah, it's audible now. It's audible. Yeah.
Okay, great. Yeah, thank you so much. Yeah.
So have you heard the question, sir?
No, I haven't heard. There is some, I think, technical issue here.
Okay, so can you, in your views on the tax implication of this sector-wise allocation?
So, I just not concentrating on the sector-wise allocation per se, because, for the benefit of the students, I will just, mold the question a bit slightly different way. So I just wanted to, give my thought perspective and section-wise changes in the basically, specifically talking about Income Tax Act. What are the changes have been introduced, in this Income Tax Act per se. So we will cover, basically three areas. Probably one is from a corporate tax perspective, and the other one is from a personal tax perspective and a startup perspective. So what are the changes have impacted, and how these things will come into play. So to start with, so I will just take section wise, the changes which will happen in the budget. So if we can talk about, starting from section 247A, so which is basically, there is an hue and cry in the country regarding the cryptocurrencies. People have created a lot of profits. There is no subject how to tax the same in the Income Tax Act. So probably the government this time introduced, there is an definition of a word called VDA, virtual digital assets. So they under section 247A, they have introduced the definition of a virtual digital assets. And probably, now they wanted to, they have also clarified the taxation under, section 115, BBH. So they said, if you have a virtual, if you are dealing in a virtual digital assets, and you have basically, sold a virtual digital assets, then probably, there would be a tax on the profit of the virtual digital asset. The tax would be chargeable at a rate of 30%. This is prescribed under 115 BBH. And probably, they have also said in 115 BBH also, if but suppose I will give you a simple example. So I have a virtual digital assets, or you can call it a cryptocurrency. So I bought it for a, say 1 lakh rupees, and I sold it for a 2 lakh rupees. So there is a 1 lakh, profit. That profit is subject to tax 30%. So what will happen? Suppose I bought it for a, 2 lakh rupees and getting a sale for a 1 lakh rupees. So the loss of 1 lakh rupees. So government says, no, this loss will not be allowed to be set off. So neither this loss is allowed to be set off under any head of income, or neither loss is allowed to be carry forward. So earlier there in the income tax sections, there are provisions where if you are doing 2-3 businesses, so there is an so if I can just give you a brief, the computation of income, there are 5 heads of income. We talks first is a salary head, second one is the heads under that income from house property, third one is income from business and profession, and fourth one is income from capital gain, and last one is income from other sources. So if we talk about any head of income, then there in section 78, 79 we talks about if the loss, then that loss is set off other heads of income. But if we can talk about specifically digital asset losses, if you incur some losses on account of digital assets, please, so this loss is not allowed to be set off under any head of income, nor this loss is allowed to be carry forward to a future years. So this is a dead loss, if I can simply qualify as a dead loss. So loss is not going to be allowed. That is one. Secondly, in this is in the sale consideration. So you are not allowed to reduce any expenses. Might be you incur some expenses, like you hired a guy as a managerial guy who is taking care of all cryptocurrencies, and you're paying salary of 1 lakh rupees per month. So can that 1 lakh rupees salary per month is allowed? The answer is no. The only cost of that cryptocurrency is allowed. Any expenses which you have incurred in order to generate that income of crypto virtual digital assets, that expense is not at all allowed. Only cost of cryptocurrency or virtual digital assets are allowed under the Income Tax Act. Now, similarly, in order to track this, suppose there are a lot of people who basically, don't add this, profit in their computation of income. A lot of queries I received from a client, Mr. Bajaj, how can government comes to know if I sell that asset and I don't offer the same in my computation of income? So in order to basically, tighten this problem, so government also parallelly introduced a section called 194S, which is the withholding tax provisions. So all section 194X, 194 sections under chapter 17B talks about withholding tax, or what we qualify as a TDS. So like, all we know, whenever we are getting a salary, so there is an TDS which is deducted by the employer, and they issued your form 16, and you can file your return and claim the TDS. Similarly, under the virtual digital assets, but the government did was that, suppose if I am buying a virtual digital asset from you, so in that case, it is my duty, if I'm making a payment, suppose let us take example of 1 lakh rupees, if I'm making a payment to you for buying a virtual digital assets, the government says you have to withhold. So being a buyer of virtual digital asset, I need to withhold your TDS by 1%. Suppose now I need to pay a 19,000 to your bank account and 1,000 to the government as a TDS. The moment I deposited TDS to the government, automatically this transaction will be catch. You cannot rule out this transaction, because this transaction automatically catch in your accounts, and the government have a proper, a reconciliation of the virtual digital currencies that you are traded. So now you're forced to offer this transaction in a computation of income, and you have accordingly make a taxability. So similarly, in this there are certain under as far as withholding tax is concerned, so there are certain exemptions are also given. It is not compulsory for everybody to withhold the taxes. So it's divided into two parts. The section says there are one is specified persons, other one is a non-specified persons. It says if you are a specified persons, then the limit is 50,000 rupees. Meaning thereby, if I'm a specified person and I'm buying a virtual digital asset from you, and in that case, if the value of the virtual digital asset is less than 50,000, I need not deduct TDS. And if in case of I'm not a specified person, then in case the limit is 10,000 rupees. So now what is the meaning of specified person and non-specified person? The government has also introduced the meaning of a specified person in the same section. It says if I'm an individual in HUF and my turnover is less than 1 crore, and if I'm a professional, my turnover is less than 50 lakh, in that case, the limit is 50,000 rupees, because I'm a specified person. And in that case, rest all the persons are non-specified. In that case, the limit is 10K. Beyond 10K, you have to deduct TDS. Less than 10K, not deduct TDS. Above 10K, you have to deduct the TDS. So similarly now, there are one more interesting things, and people have started, if I can also give, gift, suppose if the tax, so it's very good, if I have a virtual digital asset, I can give to my spouse, I can give to my father, to my mother, then it's also exempt. So no, so government has again introduced the word, and because the taxation of gift in income tax act deal with section 56 subsection 2 clause 10. So there are a specific, if any individual receives any property, any property, any immovable property or any other property, if the value is more than 50,000 rupees, the donee is liable to pay basically a gift tax, or what we call as an income tax at the rate of slab rate or 30% as per his computation of income. So now earlier under the definition of property under section 56, the word virtual digital asset is not there. So now what the government did was that they have parallelly also introduced the word virtual digital assets in the property, and side by side they have said if you are transferring a virtual digital asset to anybody, whosoever the holder, whosoever the donee of the virtual digital asset, then in that case that value of that virtual digital asset will become the income in the hands of the donee. So now this we cannot also give, yes, but as far as relatives are concerned, yes, you can give to a relative virtual digital assets. That's not taxable in the hands of relative, because relatives are exempt from taxes. So if we can talk about summarize this section, so there people are asking me what is a good way to plan this, because see, a lot of people are holding these virtual digital assets. Some people are also taking a view that if we can sell the virtual digital assets, or you can call it a cryptocurrency before 31st of March 2022, because this law comes into play on 1st April 2022. So a lot of queries comes into with me, Mr. Vijaji, if I can sell all the assets on or before 31st March 2022, am I not liable to pay any taxes? Though the answer is no, it's not like the case, because income is always subject to tax. The only difference is that before 31st March, if you can make a transaction, or if you make a sale of a cryptocurrency before 31st March 2022, it is subject to income. It's maybe charged taxable as per slab rate, or whatever, maybe 10%, 20 or 30 as the case may be. But if you're selling it after, on or after 1st April 2022, then it's 100% 30% taxable. So there's the only flip side of the game. Either you can sell before or after, it is subject to taxes. Then one more we can say sharing you to my students or who are basically dealing in the practice as a, we can also do planning in this, cryptocurrency, this virtual digital asset. So a lot of people are doing, the very volatile market of these, cryptocurrencies. So there's also a very good way of planning as taxes. So you can always, sell that asset when you are to the planning and track. Whenever you are closing to the 31st March, you can always sell to that asset and book a basically no profit no loss situation, and on an immediate next day you can buy it. So ultimately you're the same position, but there is no taxes per se, because we are following the procedure of law and we can plan the taxes. So this is all about the section of if we can call about a digital virtual digital assets. So now next we come to personal tax. Okay, so next we talk about to our salary changes in, if we can talk about personal taxation. So there is not much, there is a lot of ray of hope for the people from a salaried employee to get basically, changes in slab rate. A lot of people have a expectation because from a work from home situation, a lot of allowances in terms of internet and other facilities have been consumed. So there is an expectation from the government, they can give some sort of, work from home allowances and all. So nothing has been given because there is in this budget. But however, yes, as far as this COVID situation is concerned that we have already faced in COVID-19, so they have come up with a amendment in the corresponding sections, both for salaried and non-salaried employees. So they have so if we can talk about salary is basically taxable under section 17. So 17(1) is a salary, 17(1) definition of salary, 17(2) defines the perquisites, and 17(3) defines the profit in lieu of perquisites. So what they did was that suppose if you are from an employer, suppose if I'm getting any medical treatment from expenses on account of medical treatment of myself being an employer or any family member of mine, then in that case, that amount which is for my medical treatment of a COVID-19 illness, either to myself or to any member of my family, that amount shall not be treated as a perquisite in my hand. So that is exempt from taxes. So any employer who is paying as for a medical treatment is not taxable. This is particularly defined under section 17 subsection 2. Similarly, for a in case of a medical treatment, so what about those cases who are not employees, maybe who are consultants, who are some normal people who are getting aid from medical treatment. Sometimes in this pandemic situation, a lot of organizations, a lot of trusts, a lot of societies contributed the funds, and they come up with this noble cause. They have treating a lot of patients on their own cost. So now the question arises, what will happen to a guy who get a medical treatment from a trust or from an NGO or from a society? Let us suppose he got a treatment done, the cost of the bill is 10 lakh rupees. So whether this 10 lakh rupees is taxable in the hands of that guy, this gentleman, the answer is no, because section 56, again section 56 subsection 2 clause 10 has brought an amendment. They said if any person who gets any amount or for the medical treatment on account of COVID illness, that amount is not chargeable to tax as a gift or as any other head in the hands of that particular resident employee. So similarly, the medical treatment is exempt. Now again, they come up with they deal with the ex gratia situation also. In case of a person who died on account of COVID, a lot of deaths we have witnessed in COVID situation. So if a person had died, so any amount which is received from an employer. So if a person deceased received to the member of a deceased employee from the employer, that amount is also not chargeable to tax. That is tax free in the hands of an deceased member of an employee. However, in case of an ex gratia amount received from an other than employer, I'm talking about those situations like there's no employer-employee relationship, there may be some other relationship. If that person, gentleman receiving, the deceased member of a person is receiving any amount, maybe from the government of India or maybe from other organizations, that amount is also exempt, subject to a limit of 10 lakh rupees. So any amount received over and above 10 lakh is chargeable to tax. Any amount, any ex gratia amount received less than 10 lakh is exempt from tax in the hands of a basically the person who is receiving the amount. So this is all about personal taxation. So there's much in personal taxation happens. So this is the COVID situations. This section comes into play. So now we're jumping to business houses, the businessmen who's basically doing a business. What are the changes brought by this Finance Act 2022 in the business houses? So there are two amendments which happened under, rather we can say three amendments which happened under in a business income. So that's the amendment. One is amendment under section 37(1), then section 40 clause A, and then the third one is section 43B. So the first amendment talks about section 37(1). I will give a brief backdrop of section 37(1). Section 37(1) talks about basically expenditure which have been incurred for the doing a business. So if you're doing a business, so there are some sales from that business, so there are certain expenses. Section 37 says if you are doing any expenditure in order to earn that business income, that expenditure is allowed. There are certain three essential ingredients of a business. That expenditure is basically not for the purpose of, not covered under section 30 to 36 of the Income Tax Act. Then secondly, it says not a capital expenditure or personal expenditure, because capital and personal expenditure are not business allowable expenses. Third one, it says it is wholly and exclusively for the purpose of business. If you fulfill these three conditions, all the expenses are allowed under section 37 of the Income Tax Act while computing your business income. So in the 37(1), there is one explanation which says if you incur some expenses on account of prohibition of any law or any offense, suppose I will give an example. Suppose if I can do any expenditure which is violence of any law. Suppose I pay some bribe to someone, which is not allowed. Okay, if I say something which is offense, okay, I will give some amount to murder some guy. That is not a business expenditure. That is not allowed. This specifically mentioned under section explanation to 37(1). So now what will happen is that they have broadened the explanation. They say from henceforth, not only offense or prohibition under India, even though if you are doing any expenditure which is an offense or a violation of law, maybe internationally, that's also disallowed. So earlier the internationally word is not covered. People are taking a view, if I'm doing any wrong in a foreign country, that expenses is allowed in India. Now the law says no, even though if you're doing any wrong in India or outside India, that expense is not allowed at all. That is not allowable expenditure. Secondly, they have also said like a lot of manufacturing companies, if you can talk about pharmaceuticals, they have a practice of giving freebies. There's samples to the doctors, their medical manufacturers. So earlier some courts have a view that this giving medicine samples to doctors are basically against the code of conduct of a medical the guidelines of a medical codes. So they said any benefit or a kind, if a businessman is giving to a benefit or a perquisite which is against any policy of that organization or that code, then also that expenditure is not allowed as a business expenditure. Thirdly, they said any compounding fee. Sometimes some offenses has happened. So like in FAME, a lot of we have been a lot of day and night. Some offenses have happened. So there is instead of paying the instead of being a compounding, we can get the compounding of that offense. So we pay some compounding fees. So also they said if you're paying any compounding fee, that compounding fee is also not a basic deductible expenditure. So they specified three types of expenditure which are now henceforth are not treated as a business expenditure. Now the second amendment, which is section 40 clause A. So it's a very simple amendment which says whenever I am a business guy, I am just doing a lot of expenses. So if I am paying income tax to the government, that income tax is not allowed as an expenditure. That is not at all a business expenditure. So the tax department won't allow the income tax paid as a business expenditure. Earlier, there are a lot of because in the section 40 clause A, subclause I, only word rates and taxes is mentioned. There, the people are taking an interpretation, and courts have also taken interpretation. Surcharge and higher education cess. We generally, because you might have seen in your computation of income, there is people who are having an income of more than 50 lakhs and 1 crore. There is an additional surcharge. Then if there is an additional cess also, say, higher education cess 4%. So these two expenses, surcharge and education cess, earlier people are taking as a business expenditure and allowing in the computation of income. Henceforth, with a retrospective effect, they said because surcharge cess came into in the year 2005 to the best of memory. So since retrospectively these expenses are not allowed as a business expenditure. So this is all about. And third one is a 43B, which is again a payment criteria deduction, which says if you have outstanding interest on debentures, so if you can convert this the outstanding interest to a subsequent debenture, that that cannot be considered as a payment and you cannot allow a deduction. So if there is outstanding interest you have to pay, then only you can get a deduction. So this is if we can precise for as far as the amendments that happen in the business income chapter. And if we can talk about a startup per se, so startup in a startup they are basically
So, sorry to interrupt. actually we will discuss some of the points in later. We have different pointers. 7 more pointers are there. So I have put some view points on the later. We can discuss the some of the topics in case.
Sure.
So sorry to interrupt, sir, because 7-8 points are also there. So next, can we have views or query from the students in case they have from
Yes,
student?
sir, I think we have some queries coming in. Um, Sarthak, I think, is wanting to ask a question. Sarthak, you can please go ahead and put forward your question.
Yes, ma'am. So, good afternoon to all the panelists. My question is, when we talk about the allocation of funds to various sectors, we see that the important schemes in the MSME segment, like the credit linked capital subsidy and technology scheme, which is one of the important scheme for technology upgradation, has not secured any of the funds in this budget. So what I would like to know your viewpoints on what the government is trying to achieve, or what is the motive of the government behind these slashing of funds or not allocating the funds there.
Any of the panel member in case of this
Uh,
or
I
of
think
this
the question is open for all the panelists. Anybody can kind of, help out the
anybody
student.
can help. Yeah.
Okay, Sathak is Avdesh. I'll just take the Sathak. So let me understand your question better. You are trying to say that there's no separate allocation for the technology. Is that correct?
No, sir. My question is that many of the schemes under
Mhm.
the MSMEs
Yeah.
have either failed to secure the funds this time, or their allocation of funds have been slashed to more than 75% this in this budget in comparison to the previous one. So
Has been curtailed. Are you saying funds are curtailed?
yes, sir, the funds have been slashed down.
Okay. 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 See, I tell you what happened with the MSME when government in the COVID period started this. Uh, MSME, though the schemes which are announced were very good, but it actually failed on the ground. I tell you, when it actually came for banks to lend to MSME or MSME to secure, bank were still and bank were still worried, though they had a government guarantee. They were still worried lending. They didn't want so it comes on individual banks. They have to amend their risk policies and things like that, and then they fail to do that risk policies. Private sector bank anyway decided not to get too much into it, because they are not sure whether scheme will function properly, and in case of guarantee call they will get the money or not. These are situational ground, I'm telling you. And public sector bank actually could not frame the policy rightly. Their execution was very, very poor on this side, and now probably requirement is not that high post the pandemic. That's the reason government is curtailed on this. Have I answered, or something else is remaining?
Any other panel member?
Yeah, Sarthak, one in this budget, government just extended this emergency credit line. And second thing, what in this budget is said that this another scheme, this credit guarantee trust for small, micro and small firms, that they are saying to revamp. These two things specifically we can say in this budget. But here the question, as of this is saying, this money was made available, we can say, in 2020, but still we can say even not more than 60% that money is used. It lying there. The question is why it is lying there. This is the one. And if we try to learn from this other scheme, this credit guaranteed scheme, the other scheme which government is trying to revamp, and that scheme is in existence for say last 20 years, around 20 years, 2003 or 2 it was started. But why these firms are not using it? Although our SMEs, they are the small and micro firms, they are always in need of money. because there this transaction costs are so high. 2 to 3% is the transaction cost. So until and unless government will not work on reducing this transaction cost, so that money means whatever scheme may we announce in that, I believe it's not going to make much sense. So that's why here government needs to, when they are saying this revamping, they need to look into this transaction cost, and then only it may work. Otherwise, it's not.
Right, sir. Thank you so much, sir.
Okay, right. Next, I
Any
think we
other
have
query?
Akshat as well wanting to ask a question. Akshat?
Okay.
Good afternoon to all the panelists. My question is for Anil sir. Sir, considering the expectations of salaried class from this budget, so why was there no reduction in income tax?
No, it's it's a very altogether a very peculiar question. There is a no reduction in the income tax because see every budget already this budget have already given if you can see the last year amendments, so budget has already given a lot of concession in terms of slab rates. Then they were introduced a regime called new regime, which is also a concessional tax regime. So, because government witnessed that there is no additional requirement is there to give an expectation, so that's not there basically, And similarly, there is no budget, there is no if we can give more and more exemptions, so tax rates just already get changed. So we are already stable taxation, and the tax rate is coming out of the stable when as compared to other global economies. So they don't consider as a consider for allowing further reduction in terms of slab rate or any other reduction.
Any
All
other
right, sir.
panel member in case you want to add anything?
Yeah, okay. So I can just give a see was let me tell you straight. It's not given because this is not a Lok Sabha election year. You will see it next year. Okay, as simple as that. Okay. Now coming to that, you will see a huge tax concession next year. Okay, because that's the last budget for the current term of the government before the election. So, but I see. I'm not unhappy that it is not given. Okay. See, understand what you want. What's your priority? Tax concession is something which impacts us directly, and it is seen and visible so directly that everybody wants a tax concession. But I think people like you should look for whether I have a better job opportunity in future or not, whether there's a growth, I will have better salary or not. I can assure you, if you will have a better placement session next year. Okay, so you want a better placement or you want a tax concession? That's the call you need to take.
That
Got
was
it, sir.
very
Thank
good.
you so much.
Thank
That
you.
was very
Yes.
good.
Right, right. Okay, so I think we'll get the next question from Yash Jindal,
I
maybe. Yash, beta, are you there?
Ma'am, sir, this year the budget talk about the RBI digital currency that will be in the circulation from the next year. They also takes cryptocurrency when there is no regulation around it. According to you, will that work?
I think
Was it?
there is some technical problem, Yash, beta.
Yeah, yeah.
We can't actually get in the question clearly from your side.
I think you
Ma'am,
can
am I
mention
audible?
it in chat box. Yeah, yeah.
Yes, yes.
Yes. This year the budget talk about the RBI digital currency that will be in the circulation from the next year. They've also tax cryptocurrency when there is no regulation around it. According to you, like how will that work?
Question part is
I think you know what, we can discuss this when we discuss the consequences and the implications of the digital currency that we are all talking. We'll discuss that under that. We'll just have one more question. That is Dr. Ramanpreet Singh, sir. So one more question, and then we'll have only the question from the moderator to begin the
Yes, yes.
next set of issues. Yeah, thank
Madam,
you.
my question is also on the cryptocurrency.
Okay.
So, can I?
Yeah,
Can I
please,
proceed? Okay.
please.
Okay. First, I would like to compliment Anil Bajaj for explaining this cryptocurrency announcement in a very simple way. So, my question is, when this announcement was made, we thought that India is finally on the path to legitimize the cryptocurrency sector in India. And I was hoping that in this budget, they will lay a foundation for for a robust ecosystem for digital assets and currencies. But when we look at these announcements, like tax 30% flat tax on gain from cryptocurrency, so the government just want to have a major share of the pie. And second is the 1% TDS. They just want to track the transaction. Third was the gift received as cryptocurrency will be taxed at the same rate. It is also towards discouraging people from investing in cryptocurrency. And the last one, which is the I think the loss from the transfer of virtual digital asset cannot be set off against the other incomes. So I don't know, means though they want to regulate this digital currency, but at the end of the every article they are saying that taxation doesn't mean that we are legitimizing cryptocurrency. So I want to know your view on this कि एक तो वो इसको legitimize नहीं कर रहे हैं, but they want to eat the major portion of their earnings. So don't you think that if we want to lay a foundation, we should legitimize this cryptocurrency? Thank you.
Anil sir.
So, I understood your point. So, if we can prima facie see the amendments and the take of the government, probably yes, they wanted to take a 30% share from basically, the virtual digital assets. But this is not the case, only in case of VDA. So there are, if you can see, under Income Tax Act, there are certain, if you can talk about lottery. So see, the intent of the government behind is that because whenever we are doing anything which is, what I can call a speculation income or what we call as a windfall gain. So that's are already taxes in the statute book of 30%. If you can talk about lottery winnings, they're already taxable in 30%. So yes, because see, the government wants to collect taxes on a virtual digital asset because it's not a legal tender as of now. So that is maybe one of the reason because they are taxing at a higher rate and not allowing you basically set off of losses and all. And that is not basically only in VDA. If you can see other like commodity exchanges, and if you can talk about speculative transaction under 43B, the same provisions are almost parametric provisions are also there in those exchanges on also transfers. So what I can simply say, yes, it must give maybe I think it's a new first time introduction. So, and things are not in that place. How can we channelize that? So government wants to tax at a higher bracket, and definitely when everything is taxed at 30%, is a very huge, for a salaried employer, for individual, there is a slab rates are available. So if we can get an income, there may be 10%, 20%, but it's a maximum marginal rate. So you rightly said it's sort of demotivating. But yes, at the same time, they said if you are earning a huge amount and without application of mind, because it is something out of the box which is fluctuating and there is a lot of volatile in the market, and you are getting out of a good amount, then they want a big share in that. And coming to the last point, gifts. So gifts provisions are already there in the statute book. If you are giving gift, not only crypto, forget about virtual digital assets. If you are giving gift today's world to anybody except relative, so I'm not covering about relative, which are defined under the explanation to section 56 subsection 2 clause 7. Apart from that, if you are giving gift to me, suppose 10 lakh rupees, then it is chargeable tax in my hands. If you are giving your gifts, it's chargeable tax in my hands because there is no relationship of relative. So similarly, that is not, I think, a new thing. Since already in the statute books, they wanted to tax gifts because there was no gift tax act. This was abolished earlier. So now they wanted to in the income tax, a gift is taxable as a but yes, if I talk about normal gifts, that is taxable at slab rates. But in case of this VDA, it's taxable as a maximum margin rate because their taxation is specifically prescribed as a special taxation. So that is the only difference, But if you give a VDA to relatives, it's not taxable. Your relative, whosoever you're giving, it is taxed in the hands of a relative.
Yeah, what we can add to that, Dr. Sim, when government is means taxing these assets but not legalizing, it simply means that they are recognizing these are the things which are happening in the society or economy. We should not ignore it. But government is still not clear on that, whether it should be banned or regulated and what way it should be. And intention is that because these currencies, these cryptocurrencies, they are based on this concept of blockchain technologies, which are useful in many areas, not only as a finance markets, in other areas also. So as such, this technology we cannot avoid. We have to use it for social benefits in the context of the economy, but simultaneously because it has the other side also, which are not well understood at right now. So that's why intention is just to recognize it, not just to getting the money. That it is in the society, we should recognize it, and in that way keep the track of also of these assets. That's the main intent, rather than say the revenue generation or anything else behind that.
Can I be allowed to add something?
Yes, sir.
Yes, sir. Please.
So, Dr. Manpreet, see, I am a conservative finance person. I don't mince word. Okay. Government is taxing it heavily because it doesn't want to ban it and want to discourage it.
Absolutely.
It can't ban it just for the social reason because people's money is involved. Okay. Ideally, government, I mean, I'm sure finance minister would like to ban it, but she cannot ban it, in current circumstances. Okay. Now, we call it, it's not a currency, first of all. No, there is a very clear statement from the secretary that we will never recognize it as a currency. It can at best be called a digital asset. Okay. See, currency has a proposition. If you pick up a note of 500 rupees, just pick up any note of 500 rupees, it has signature of RBI governor, which says, I promise to pay you a sum of 500 rupees if you bring it to me. Okay. Now, who has guaranteed cryptocurrency? The Japanese fellow, nobody has ever seen him. All these people sitting on computer generating, you can't create an asset like this. Okay. So asset is created by when you build infrastructure. Asset is created when you mine gold and coal. Okay. The companies, there's so many ages companies are built. This I don't know what you call it, as a conservative finance person. This is not even worth an asset. So government understands this, okay, and government wants to discourage it. It cannot ban it, but it is discouraging it very, very heavily.
Dr. Agnihotri, anything from your side? Yeah.
Raman, your question is very, very relevant. But I will like to point out one thing that in Income Tax Act, we teach in the first chapter itself, that as far as income tax is concerned, we do not distinguish between the legal and illegal income.
Yes, sir.
That's the first point.
Totally agree.
Second,
sir.
we should read this point and the budget point along with the budget cryptocurrency bill which is going to come. Because government wants that if you are making any transaction in US dollar, then the rupee as a digital currency is coming, you trade with that. But as you are investing something which may rise to 100% today, and tomorrow it will fall by 150%. So it is a pure speculation which is pointed out on Anil Bajaj. So any speculation is not allowed to set off, not allowed to carry forward. If you have income, pay it. Loss, that loss, you should take it on. So government is discouraging, which is Avdeshji has already pointed out. And so my advice, and if you want to have more detailed on this, there is a discussion on my channel with Mr. Subhas Garg, who is the ex-finance secretary, who drafted this cryptocurrency bill. Many doubts on this crypto digital currency which the budget has given, that will be washed out from there. He has explained very well on that point. Yeah, thank you. That's all I want to add.
Thank you, sir.
Just because this discussion is taking an interesting turn, actually there are more than 4,000 digital currencies, right? How do we get all of them into the ambit of taxation? I mean, is it a doable thing that the government is aspiring for?
When the money will move from your bank accounts, so the moment it is moving from your bank account, 26 AS will find it out. And just wait for 2 more years, all your bank account and incomes are going to be clubbed with the blockchain, AI and machine learning. Whatever you do it, government knows it. And I will also say that salaried person will be exempted from even filing the ITR. Just wait for 2-3 years. Because whatever the tax is there, it is already corrected. If you have any explanation, then put it and recover it. Anilji, I think CA hai. His team and his colleagues will have a tough time, say after 2025. That is what I think of. Because many small ITRs, like Surendra sir, which is filing, or myself is filing, or Raman is filing, or you are filing, we need not to file any ITR. भाई सरकार पैसा देती है, सब कुछ कट के मिलता है, ना तो हमें देना ही नहीं कुछ पड़ेगा. हाँ, अगर कहीं से कोई इनकम है तो आप शो करिए. तो मुझे नहीं लगता है गवर्नमेंट हमारे पास कुछ ऑप्शन रहने वाला है. तो अपने बेसिक फाइनेंशियल टूल्स है वहां पैसे लगाइए. एज Avdesh said that he is a conservative finance expert. So share market, mutual fund, which is legal, put the money. Why this digital currency issue need to be challenged by the government or has to tackle by the government? Ma'am has pointed out more than 4,000 digital assets are there in market. Do we know who the hell is printing it? We do not know. Some Bitcoin is released by someone else. Who is he? We do not know. अभी पिछले क्वार्टर में 70% नीचे आ गया. Where is up and down? We do not know. So that is why it is. I feel the government cannot ban it because speculation आप IPL में दुनिया जान में लोग करते हैं. So that is always there. तो पैसा कमाओगे तो टैक्स दे दो सरकार को. सरकार कहते हैं लीगल इलीगल कुछ नहीं होता, पैसा आना चाहिए ज़्यादा. और Avdesh ji has rightly pointed out, just wait for next year. You will have some concession because that will be a poll year. And this year government was wanting to consolidate the job data. Whatever the money they are receiving, the job can be given by the companies. So MSME को fund दे दीजिए. और Surendra sir has said that during the last few years, 60% budget is unused lying because the conditions are such in those schemes. Like if Avdesh ji's company wants to take, is a SME and wants to take a loan, his books of account should be very clear. No NPA. If he is not NPA, तो पैसा चाहिए ही नहीं है. That is why it is coming K-shape. मैंने कहा कि बाहर से ऊपर वालों को फायदा है, बाहर से नीचे वाले तो वैसे ही डाउन है, तो पैसे नहीं मिलता बेचारों को, कहाँ से लेंगे वो? That is what the problem. Thank you, Kanpal sir. Sorry, I have taken more time than you given to me.
No, but I think yeah, let the discussion. Yeah, Mr. Bajaj, please. Yeah, I would like
just to add on your point. You pointed out there are more than 4,000 digital currencies. How did government track? So if you see the definition of section 247A, which talks about a digital virtual VDA, virtual digital currency, it's not talk about any crypto and all. So if you see, definition is very vast enough. It's also covered fungible token, non-fungible token, any cryptocurrencies means anything. So that definition is very, very exhaustive. So not only 4,000, if in future it comes to 10,000, that's also get embedded in that the definition, because Lord Drafters has drafted the statute in such a fashion all the digital assets comes into play except currencies. So they have excluded the foreign Indian currencies. So if it is a currency, that's out. If it is not a currency, anything which is generating out of digital means it's covered under the virtual digital assets, and you have to pay 30% as of now and subject to a withholding of 1%. So there is nothing rebate for that. Everything is covered, had it been legal or illegal.
Thank you, everyone. I think we've had the discussions on digital currency, so that pointer for discussion has already been taken care of, courtesy the questions from the audience. So we can go on to something related to GST. Over to Dr. Khandwal, please. Yeah. Okay, I think he's not around, so till he gets back to the call, the GST and how the GST collection is attributed to, which sector. Are we expecting the maximum GST collection, and what is the role of the manufacturing sector? If we are saying that we're giving the impetus to the manufacturing sector, is there any provision made into the GST to facilitate that? So that's the next pointer that we thought we would discuss. So anybody can take on the question.
Yes,
please.
it's about the highest GST collection, which is mainly attributed to goods imported and not through local manufacturers, etc. So that's the pointer that we have right now.
Yeah, so if it is open to all the panelists, yeah. Sir, Surendra sir, we can't hear you. I think you're muted. Could you just unmute yourself? Yeah, sorry. Yeah.
So means first of all, this GST issue is not related to budget. GST related decisions, they all lies under the domain of this GST Council, which we can say cooperative federal structure, rather than just union government can take decisions on that. Okay, so as far trend question is concerned, and here what we can say means if we take this textbook kind of setup in that, and there what we realize that in this last means say a year or two, this compliance structure, it has improved, though still it's very complicated. One, then this enforcement, that's also somehow it improved. So this enforcement and compliance, rather than per se just the sales, or you can say the consumption part has increased, because during this period, in this period, what do you find that still your aggregate consumption is below the pre-pandemic level. And GST is basically a destination consumption based tax. So then how it is going up? So it's not that your consumption is increasing either from say the domestic industry or the imported one. It's still below the pre-pandemic level, but whatever increase is there, it's coming there because of better, you can say, this compliance or this enforcement part in that one. But still, if we have to improve it, more simplification is required. And as we go for more simplifications, it will also help not only increasing the revenue part, but also will what main objective of GST were, it helps in achieving those objectives, means giving boost to manufacturing and as well as economic activities. Yeah. Yes.
Yeah, Mr. Nagar or Dr. Agnihotri, anyone, please.
GST, as Surendra sir has rightly pointed out, that it is a GST Council decision. GST is increasing as per the government, but when we are saying about the GST collection has increased, we miss one particular information, that what is the input credit out of that. If government is saying it is 1,50,000 crore, so is it net 1,50,000 crore, or it is just the gross GST collection? If it is gross, then there is a question how much input credit is there, because that need to be set off against that. Then the consumption in India is increasing now during the last 2 quarters after the second wave of COVID. So the industries are now started working and growing at the current rate, which was a pre-pandemic era. So there's no doubt the GST is increasing. So, and we are recovering faster than it was anticipated by many of us, that after the pandemic, it will not be possible for the government to give the that much focus on these industry. Industry will take time, but Indian industry has shown resilience against this pandemic, and we have grown faster than anticipated, and even compared to other emerging economies in India. There is one more point related to this in the budget itself that government has, which was the Surendra sir has raised a valid question of the federal structure of our state. The government has this time said that last time it was a question by the many chief ministers that government is asking us to borrow. So if we borrow, then to fulfill the various incentive schemes, then it is we who has to pay the interest on that. So now in this budget, up to 50-year loan is giving without interest, which means if now the government, state government at their own level also can give the concessions and like the employment schemes, etc., whereby the growth can go up and the GST collection can further be increased by that. That is what, yeah. This, if you want.
Yeah, Mr. Nagar, any perspectives from you?
One is just to clarify, the GST figures are always net. This is the collection which is made by the government, because when we file the GST, we always sort of net off the payment, the input credit. So this amount is the total collection which is done by the government. So input I adjusted from the right. Now the statement which was how the discussion started, there was a statement which says that there's more collection from the import and less from domestic. So, I really don't know what is the basis of saying that. Does anyone have a figure how much is the collection from the import and how much is domestic?
I think I don't have the exact figures, but yes, it is a little more than what is expected from the manufacturing sector. I mean, this was basically to kind of see if the GST panel has actually devised strategies to boost the manufacturing, especially keeping in view the way they are taxed. And if you're talking about, indigenization of even defense, so is there any tax incentive in the GST format to help them?
No, GST will go through once the is not through budget as GST Council, as earlier the panelist says, and the GST Council will provide a tax benefit if they have to for any particular sector. Budget will not address that.
Okay, but then it's a part of the fiscal revenue, right? So
it's part of fiscal revenue. Yeah, it's a part, but the council has made for that because it's an ongoing process. Its budget is once in a year, so it's an ongoing process. So there's a reason council is made, and to looking at the federal structure because the states are involved in the revenue, it has to run that way only. So budget will not address that, and GST revenue is rising because the economy is getting more and more into formal segment. GST revenue will see is rising much more than the actually GDP rise. That's purely because what was an informal sector as of now, it was not attracting taxes, is gradually moving to formal sector, and that's why more GST you will see coming in future years.
Yeah, Mr. Bajaj, any view from you?
Just to add on what my other panelists has added, just to give a brief, so there are a couple of reasons. One is my brother has rightly said, this basically formal economy and just moving to a digital world. The more and more we basically move to a digital economy and a digital world, so the transactions get trapped, and you have to basically record that transaction in the books of accounts. When the transactions are getting recorded, so you have to pay a GST on those transactions. That is one aspect of increasing GST, and definitely it will go on. The more and more we can, move towards digital sector like Paytms, Bharat Pay apps. The more and more apps will comes into play, and we have to this collection will definitely take a boost. Secondly, the reason of boost, what I personally feel is also that the ease of compliances. So government has to see on the ease of compliances. I have faced, a lot of my clients are facing challenges. We also sometimes sometimes facing challenges in terms of infrastructure while filing returns, while taking refunds from the government of exports when we are doing exports. In the certain refunds which we take from GST. A lot of practical challenges are there. So what I can simply say, ease of doing business, the slogan that we are singing always. So once we more and more taking a smooth hand to the businessman's and less filings, less compliances, definitely this will these figures will drastically jump up, and there are a lot of still needs to be done in terms of what I can say, ease to our businessman's on this front. That's it. Yeah.
Okay. The discussion is so intense and so interesting. We don't even realize how much time has passed. And actually, I think Dr. Agnihotri and Professor Surendra Kumar, I think they both have classes. So, but there is a very interesting question in the chat box. So even if Professor Agnihotri and Professor Kumar have to leave, I think we need to address this one question from the student. So, sir, we are grateful to you for the presence, but then if you can help us answer this one question, and I'm just reading out that question. The question is, yeah, good afternoon, sir and ma'am, and this is from Garima Makhija, and the question says, I wanted to talk about welfare budget. So basically, it's having comparatively higher expenditure than the revenue. So does having a welfare budget for so many years help India achieve its goals? So it's an interesting perspective. So if you can just help me tackle this question. And Professor Surendra Kumar, if you are really short of time, I mean, we are very grateful to you for your presence. If you can also.
Just quickly, I answer and then I leave that.
Yes, sir. Yes, sir. Surely, sir. Thank you so much. Thank you so much.
Quickly in that. And if the students, they are reading this public economics or public finance course, there we have this concept of balanced budget multiplier. This balanced budget multiplier says that if your expenditures and taxations, they are equal, so as a result, this balanced budget multiplier, it's not 0, it's 1. Okay, so that's, we can say here, though our revenues, they are less and we are spending more. So as a result, what is expected that as a result, because this propensity to consume, it's always less than 1. So as a result, so economy is supposed to grow. That's the main logic behind that. And that's why these deficit budgets are presented. This is the logic. Second logic in that is because these budgets, they are sovereign budgets, and the sovereign is not supposed to default. So that's why here what you are doing, when you are spending in the current, that means you are borrowing from the future. Okay, so that's why this sustainability in that way, some way is means, because in the present, if you grow at a higher rate, then in the future you can save. And in that way, this burden of this intergeneration, that may be shared. So these are the logic behind having this deficit budgets in that.
Thank you for this answer, sir. And thank you for your time. And we are really grateful to you that you spared your time for us. Thank you so much. Yeah, meanwhile, Dr. Agnihotri, if you can also answer this before, I know you have a class too. So,
yeah, ma'am, thank you. See, dear students, I will ask you to go back to the 1920, during the Great Depression, when British Queen asked what to be done to fight with this, with the Professor Keynes at that time. He was an economist, well celebrated economics. We all studied him. He said, give them £1. So she asked what they will do with the £1. They will say, just ask them to dig a hole and fill it in evening. So she said there is no productivity. He said, hell with the productivity. It is going to increase their consumption capacity, which will increase the aggregate demand. That is what the welfare budget does. When you spend more, and moreover, it is the sovereign power who can borrow in a recessionary phase, not the industrialist individuals. That is why it is their duty to borrow and give it into the system so that the economy can have the boost. And when economy recovers, then you can collect that money by more taxes. And this is what also explained by Professor Manmohan Singh, who was our finance minister, and also the Prime Minister of India. So he has also done the same thing in 2008. And Why? Because it increase, and because the government has to put the money. Manrega is nothing other than the welfare scheme. You give the money to the people, they spend into the market, they spend into the economy, the demand increases, the tax increases, and when there is no more sales comes into the market, then the growth of companies increases. So the job which you are providing, now the corporates will provide after 2, 3, 4 years. So that is why during 2008 crisis, subprime crisis, it was a rural sector economy which has saved the India. So that is the advantage of this, and the welfare budget has helped India to grow. That is what my I have studied during the public finance paper when I was doing it. So it is the welfare budget, and it has helped India always, even during today's time also. It is a rural economy which is saving you, because in urban areas, most of the economic activities were come to a halt, and now they are recovering very fast, but that is due to the government spending into the highways and others and infrastructure. So welfare budget is always good. That gives you the multiplier effect. The more demand of goods and services, more production of the goods and services, that bring the more jobs for the youths and others into the system. And then the whole economic cycle will run, and that is what the welfare budget does. Thank you, ma'am. Thanks for giving me opportunity to attend your this particular seminar.
Thank you so much, sir. Thank you so much. Your very, very valuable insights have really helped us a lot. I know you too have a class, so thank you so much for sparing your time and still making it possible for us to hear you. Thank you so much. Yeah, thanks a lot. So we have two opinions with us, but then Mr. Nagar and Mr. Bajaj, if you'd like to add to that perspective, or we can switch to the next question for discussion.
You want me to go first? Or
yeah, absolutely. Why don't you?
All right. So this was posted by Garima, right? Am I correct?
Yeah, Garima. Yeah. Yes.
All right. So let me address Garima. See, Garima, just to give it some interesting turn, एक ना पुरानी 2000 साल पुरानी there's a Charak philosophy which says ऋणम लेवात घीयत पीवात, मतलब borrow and drink घी. उस समय घी पीना बड़ी चीज होती थी, ठीक है? आप लोग घी तो नहीं पियोगे, but this is the old philosophy. Okay. Now if you talk about the socialist budget, वो जितना बड़ा कंट्री ना उतना ज्यादा डेट होता है. So don't worry about that. US is the highly indebted country. Okay, सबसे ज्यादा डेट उसका है and it's the most prosperous country. Right. So I'm not an economist, but it's just a common science by working in the area and having some interest. I've learned these things. So all the biggest economy are actually run on deficit in the country, in the globe. We probably still among the big economy, we still are on lower side on deficit. So probably we have more room for going more socialist and borrowing more. Provided our credit our sovereign rating improve. If it improves, probably we'll borrow more. So don't worry about this.
Okay, thank you, Mr. Bajaj. If anything that you would like to say about the welfare budget,
I want to add on with Videsh only. He's rightly said, nothing worrying, because so I just want to add with one line. A good businessman is that businessman, in my sense, who rotates to churn the money of others. So everybody can churn their own money, but the business lies in churning of others' money and making money out of it. So this is how people works, and similarly how our countries also. So nothing worrying for the same.
Thank you, Mr. Bajaj. And Dr. Kanpal, actually, I think Mr. Bajaj also has some commitment after about 15 minutes. So one more perspective we can discuss before, we can close the discussion, because, we are almost 2 hours down the line during the discussion. We didn't realize the time. Yeah.
So last discussion point could be one query from my side also, and I think it will be beneficial for the students. So we have seen a number of time decision taken by the government for a tax exemption for the salaried class, but they have not gone for those measures, and they are very strict in taking some actions. So even at the time of budget, we have seen last Lok Sabha elections. So how this government is trying for generating employment opportunity? What are the steps they are taking in the different directions, instead of going for a populist kind of budget or any views? I have seen an article by Professor Mr. Avdesh on this, how this is helping in creating employment opportunity.
All right. So you're challenging my article, so I have to answer this.
No, I am very.
No,
That's why I am saying.
He is actually supporting it. Actually, we have a question. So maybe it's aligned to this. So I will just take this question from Vikrant. Yeah, Vikrant, you want to say something? Do we have the right to Vikrant to unmute himself?
Yes, ma'am. Vikrant, you can unmute yourself, beta.
Yeah, please tell.
Good afternoon, ma'am. Good afternoon, panelists. Ma'am, it's related to cryptocurrencies, I would per se, taxation specifically. So let's say if I work in a Web3 company or a cryptocurrency company, which is a Delaware C Corp based out in US, right? It comes under the legal structure of US. Now the salary or the stipend, let's say, which I'm receiving is in crypto also. Do I get taxed according to my tax slab rate, or do I get taxed 30% flat?
So what I understand, you are just telling you are getting a salary or a stipend in the form of crypto. Am I right? This is what your question is. So you're asking if I'm getting a stipend or a salary in a cryptocurrency, and what is my tax treatment in my hands? Am I correct? Taking the question correctly?
Yes.
Yes.
Okay, so as far as taxation is concerned, first of all, we need to understand that if you are getting any income, if you are presuming you are a resident of India, then definitely you have to pay taxes. Now the question rises, this not only crypto per se itself, because if you are getting any cryptocurrency, so this is taxable. There is no doubt in that, and this taxable is 30%. But having said that, there are other income also which we need to add on and less back from the computation of income. So whatever you are getting any income from a cryptocurrency, that is taxable.
Got it, sir. And the same applies for grants too. Like if I receive, let's say if I'm working on a project in crypto itself and I receive a grant from some organized decentralized org for $5,000, and so I will have to particularly pay some tax on that money, even if those are if I'm using it for my expenses in the organization, basically, right?
Yeah, if you're getting anything you are see from an employment, if you are an employee or basically what I can call as a stipend you're getting for doing any amount you are getting from your employer or your principal is chargeable to tax irrespective of the fact you have a business income. That's all to a different story altogether. If you have a basically stipend, and then also if it is not a salary, because what I understand you are getting a stipend, so probably there is no employer and employer relationship. So then definitely we can take it out from the salary chapter and we can put other maybe income from other sources. Once you put your income from other sources, there is a section called 56 with taxability, and there is a section called 57 which talks about deductibility. So there can be a scope that needs to be analyzed on the facts of your case. If you have some genuine expenses in order to earn the stipend income, there could be a room to claim expenses under 57, provided it is not a salary per se. Because if we talk about salary, then covered under 192, section 17. Section 17, there is no leverage. The only leverage is about standard deductions and HRA, blah blah blah. So there's nothing called expenses which have been allowable.
Got it, sir. Thanks.
Yeah, thanks. Dikshant, one last question from you. I know you've been waiting for long. Yeah.
Sir, so as we all know that India has the highest number of crypto owners. So after this budget, will they tend to shift towards share market? Because the crypto owners in India, most of them don't have much knowledge about even taxation. They are just investing because there's a hype of cryptocurrency, there is a hype of Bitcoin. So will Indians shift towards stock market? Will stock market be having a boom after 31st March?
So Nishantu, I think it's a very specific and subjective question. So whether it's all a behavior of a person, whether somebody wants to stay with the market paying higher taxes, and somebody wanted to get out of it and putting in the amount of a lower tax regime, but I can say like debt funds or equity funds or a mutual fund type of schemes. So it's a subjective. It depends upon the diversification of a person's need, and investment is all depending upon your needs and goals. So if I can say, just because of it is 30% taxes are there, people start shifting. I don't agree with you, because I have a lot of clients, a lot of corporate cinemators, people have invested. So I didn't see any. Yes, it's a maybe 5-10 minutes or 15 minutes challenge to 30% tax lag gaya, but things will get normal. There are other things also. एक normal बंदे का जिसकी 10 लाख से ऊपर सैलरी होती है 30% तो उसको देता ही है. So there's nothing big deal in that. And but yes, there are planning tools also. So I think you missed my discussion when I started given opening remarks. So I've given a planning also tool for a crypto. So suppose you can save 30%, because see, the beauty is that it is whenever you are trying to sell the crypto, so you can watch the market, okay, till it is almost equal to your cost. So then you can sell it and don't book a loss, because loss in any case you're not getting set off or not carry forward. So that's your all mathematics and stats will work if you can just watch the market in such a fashion when their prices are almost equal or like that. Maybe crypto is not so. Here also what I wanted to highlight, there are a lot of confusion in the people. So suppose there are 3 digital currencies you are having. So all that one digital currency have a loss, one have a profit, other a loss. So these all digital get set off in each other. There is no doubt in that. So you have to plan in such a way each can be set off. But you can also book a profit or loss depending upon a situation. Maybe you're at the close of the year, but again after the starting of the next financial year, you can buy it again, jump into the market. So these also, we are taking the planning tools in order to save taxes, but I can say legitimate planning tool. Till now, there is no, this is what I can call the loophole. Till now, there is no legislation on the subject, but definitely in a future, legislature will come up. This, what I can say cascading effect of a transactions will definitely comes into play.
Yeah, Mr. Nagar, anything from you for this?
Okay, so this was on the digital currency. See, it's very clear the government want to discourage the digital currencies. Okay, that's the reason they have brought these kind of norms. Now, I know India has the maximum user because India has the maximum youth, which were attracted toward this. As far as people continue to making money, I don't think they will reduce from digital currencies. But one has to see the net benefit. So post-tax, if you are still making money, a good money, you will not move out of that. But if post-tax you don't make money, then you will move away to other assets. If government further discourages it, and I'm pretty certain if government sees a dangerous trend towards cryptocurrency that it is still rising, no government will take few more measures to discourage in the next budget. The concern is not only that as an asset quality, it is a dubious kind of asset, but concern is also that it's such a thing with a international transfer is so easy. It's a globally traded. You are not restricted to a country. Then it can be if it thrives in India, it is an issue of national security also, because this money can be easily used for terrorism, for narcotics, for all these kind of activities, for drug activities. Nobody can track it. So government will not encourage any such kind of thing. So I have a feeling that this government will discourage it up to a certain extent that it does not remain lucrative investments. But may not happen immediately. It will take some more time.
Yeah, thank you, Mr. Nagar and Mr. Bajaj. We'll have a very, very short question. Ishan, because I don't want to leave the students' questions unanswered. I know Mr. Bajaj also needs to leave. So Ishan, quickly with your question, beta. Are you there? Yeah.
Yes,
Yes,
so
he's
good
there.
afternoon, everyone. So I had a question that although the budget was pro-growth and pushed capex, so can we discuss some pointers where the government might have under-promised yet over-delivered some promises? Yeah, this was my question.
Thank you. The audience, please. Yeah. The panel.
So Nishant, let me tell you where there's a huge government is going to over deliver. It is not still over delivered because financial year is still not ended, which is the tax collection. The physical deficit which government revised physical deficit estimate has come to 6.9% for current financial year. I am very, very certain it's going to be less than 6.8%, which was the original. It will be better than the original target. Okay, every expert is saying government has underestimated the revenue by at least 3 lakh crores. If the 3 lakh crore come in, we'll probably at somewhere close to 6.5 or 6.6. That's it. So that's where the government has hugely underpromised, but it's 100% sure. everybody in this world, every economist is sure, every economics and business person who understands the budget is sure that it's going to be over delivered on that.
Yeah, Mr. Bajaj, your views?
Nothing to add, Avdesh has already answered that
Okay.
question. Yeah.
Thank you. Thank you. So one last question, actually, though there is a question on taxation policy on startups, and my question is also linked. What is the government doing to improve the GDP growth, which is a very generic question, of course. And the next is, what is the impetus given from the taxation point of view for startups? So that's from the question that I have from one of the students. I'll just, Sahil Chaudhary has this question. So what is the taxation impetus given to the startups? So anybody from the panel.
Yeah, so startups. Yes, if you can talk about startups, so there is an already government has given because unicorns and startups are giving a very contribution to the economy in terms of taxes, and they are really pretty doing good. So the government has introduced, what I can call as a tax holidays plans for a startup. So and there was a section was introduced, section 80 IAC. And so there was a cap of, so they define the eligible startup. So they say, if you are eligible startup means they define, so the company must be incorporated on or after 1st April 2016 and or before 31st March 22, and that the startup has, that business has a turnover of not more than 100 crore CR, and the startup must carrying a certificate from interministerial board as a startup. So if you fulfill all these three conditions, then definitely you qualify as an eligible startup. And out of 10 years at your option, any 3 years can be tax free. So even though you are adding 100 crore as a taxable income, so you are not supposed to pay any taxes to the government. So that's a loss, but that's definitely add as a employment generation and motivating for a startup for economy. And so this year is getting expired on this 31st March 2022. So government has provided an extension. So government say, okay, no problem, if you have not still started any startup venture, so one more extension is to be allowed. So this 31st March 2022 is to be increased by 31st of March 2023. So any students, if they have a mindset to want to do some startup, some innovation technique, they can still do that. And that is fully tax free for as a tax holidays 3 years out of 10 years. So this is one of the added in a startup that I can qualify as. And similarly, also there is one more addition for domestic companies, which are the not directly relating to startups, but yes, is have a somehow linked to the startup. But domestic companies are also giving manufacturing companies are also giving a concessional tax of 15%. So 115 BAB was a section which talks about 15%. That was also limited, says when the commencement must happen on or before 2023. So now they have again extended to one more year window. They said, if you are a domestic company and if you are still not, commence your operation, still you can carry on till 31st March 2024. We'll still give you a tax buffer of 15%. We won't charge as a higher tax rates. So these are the, what I can say, precisely two amendments for startup sectors from this budget.
Thank you, Mr. Bajaj. Mr. Nagar, anything from your side?
No, I believe Mr. Bajaj is a taxation expert. What he has said is very, very well.
Okay, one last question that I have
yes, from Ritika.
She says, are we on the brink of a private sector capex cycle? So anybody from the panel?
Okay, so taste of the pudding is in eating. We've still not seen it. Okay, last so many years. Every optimistic person wants to think like that. I would love to see it happening, but probably as of now, it looks the best chance in last 10 years. So should be hopeful. Hopefully it will.
Another question is, what is the evolving constraint set from a macro standpoint? This is from Garima again, yeah.
Okay, Garima. So the biggest constraint which as a country we are facing is our sovereign rating. So our sovereign rating is just the investment rate, the bottom of the investment rate. So what happens if your sovereign rating is so bad? It's not so bad, but it's not good also for a country as big as us and as economy as big as us. Western world has its own notion, but our economic system and probably banking system is much more robust than what they have. I mean, they saw this Lehman Brothers crisis and all funny kind of things, but we've not seen it in our country, a banking sector. So I personally believe that our sovereign rating should be much better. But of course, this is governed by some other word which is not so sort of helpful to us. But that remains a constraint, because if your sovereign rating is of that grade, so the maximum your government can borrow in foreign currency is 5 to 6 years. So government cannot borrow more than 5 to 6 years in foreign currency. So no pension fund will come, no sovereign PF credit funds will come for more than 5 years. And lending to your government. Forget about the private enterprises or state government or something like that. So that's the biggest we are facing, and that's the reason India still will have challenge in receiving debt capital. Equity capital, direct FDI will receive because that's a equity capital for business. But receiving a debt capital will be a challenge, and that will stop our debt market evolving, which is very necessary for the growth.
Thank you, Mr. Nagar.
Actually, there is another question coming in as well from another student, Varun Garg. In your opinion, why did this budget not speak about inflation? That's the question put forward. And it's open for both the esteemed panelists.
Okay. See, it doesn't sound very nice for government to talk about the high inflation. Okay. So it has political compulsion. But let me tell you, the inflation is something which government doesn't talk. It's CSO, which is Chief Statistician of India. They come out with every month with the figure of inflation. RBI gives a guidance on figure of inflation. And there are a couple of industry body like CMIA, which do the data mining and data crunching analysis. They give the guidance on inflation. Government doesn't talk about inflation, whether it's good or bad, either way.
Dr. Kanpal, anything from your side for this?
On this question, ma'am?
Yeah, I mean, you can take on the question and then the discussion is yours actually after this. But I just have this one thing that I think Mr. Bajaj also wanted to leave. So maybe after, or maybe your closing comments, Mr. Bajaj, on whatever we have just discussed. And in case you want to leave, then you can leave.
Should I continue, ma'am?
Yeah, so anybody, Dr. Kanpal or Mr. Bajaj, anyone?
On in your actually, inflation is something like overall policies of the government is directed towards this particular step of controlling inflation or raising money or everything, and the again about the investment plans. So as sir has already discussed, that won't be discussed in budget session. It's a completely different thing. But all the policies of the government are directed, or maybe RBI is controlling that particular measure. So these are all directed towards controlling inflation only, whatever steps they are taking, and they review the decisions. The monetary policy, that government is taking these, RBI is taking measures. So that's all from my side. Professor, yes, Anil.
Yeah, Mr. Bajaj. Mr. Bajaj, anything from your side?
It's the panelists already covered, rightly said, this is not a finance budget aspect. It's a different organization which takes about inflation and all. So budget won't talk about this, as a considerate in that.
Okay, right. So, Mr. Bajaj, in case I know you're running short of time, so thank you so very much for your very kind presence,
Yes.
for sparing 2 hours for our students. We really got enlightened by your expertise and experience. So thank you so very much for joining us today.
Thanks.
Thank you so much. And Mr. Nagar, actually, I still have this one question. So how do you think?
I will take this question, but you'll have to allow me after this question also. We have certain engagements. So please go ahead with the question. Yeah.
Yeah, just this one. Okay, just this last question, which actually covers our last pointer. What is the government what is the major strategy that government has planned to boost GDP growth and cover the fiscal deficit. I mean, out of all the things that government has actually planned, they seem to be a little long term. So for that current year fiscal deficit coverage, what do you think has the government done?
See, as there was the first opening remark which I had made, government is very unapologetic about the fiscal deficit. That's the message they have sent. Okay. So I mean, everybody was expecting fiscal deficit to be around 6% or less than that, but government has announced we will take 6.4%. So government is saying, no, we will grow the country. The hell with the fiscal deficit. And if rating agencies don't listen, are so perturbed, it's their problem. We don't have a problem. Okay. So fiscal deficit is that way. Now coming to the growth. Now, since government has taken the higher fiscal deficit, that's the money it's going to provide for the growth. The best way it is going to provide for the growth is the higher capital expenditure from the government, which will be a multiplier effect. Not only growth, how you use the money. You use the money which gives you a one-time sort of benefit, or you use the money that it keeps multiplying, keeps giving you benefit for a longer run. So capital expenditure is something which has a multiplier effect and keep giving you benefit for the longer run. So government has increased its capital budget outlay by 35%. Total budget outlay has gone up by some 14%. Okay, but the capital expenditure as an item is 35% higher. It's like 5.5 lakh crore to it has gone to 7.5 lakh kind of crore. I'm not exact figure, I really don't remember, but it's around that much. Okay, so that basically means where will this money go? This money will build road, it will build water works, it will build power plants, it will build trains, urban infrastructure, railways, those kind of things. And imagine these sectors are so labor intensive, and they require how many engineers will they need? How many people who understand sort of finance and budgeting will be required for everything. If you build one building, even if you are building say one road, it develops the entire sector. Wherever the road goes, it brings the development around that area. So government is spending in those places which will build further development, will incentivize other people to come with the money and provide more employment, more economy benefit. So that's the idea of government, and it comes from a capital expenditure. It doesn't show immediately, but it has a very long-term impact.
Thank you so much. Thank you so much, Mr. Nagar. Yeah.
Thank you, ma'am. Please allow me.
Actually, it also answered my query.
All right.
Yes,
glad
thank you so much.
I could do that.
Thank you.
Thank you.
Thank you. Thank you, sir.
Mr. Nagar, I mean, we're very so very grateful to you for your time. You've been very valuable with your inputs. So thank you so much for joining for our students. It was an immense pleasure to hear you. Yeah.
Thank you. Will you have a recording of this session by any chance?
Absolutely, because we still have a word of thanks, formal word of thanks, which is in waiting. We have a formal felicitation, which is in waiting. So all that is still in waiting for the guests.
Best of luck to you with that, and please share that. Thank you.
Thank you so much. I think, Shelly, maybe you can just quickly start because I think they're all in a hurry. We have actually overshot our schedule time.
Yes, ma'am. Yes, ma'am.
Please,
right. So, taking things forward very quickly now, it has been a truly enriching experience, and we express our really heartfelt thanks to all the esteemed guests for providing such valuable insights into this year's budget. And we are deeply indebted to all our guests for having spared their precious time and for just gracing the occasion and, getting us so many inputs about the budget. And we are definitely richer in terms of our knowledge for sure. And I will now request Ms. Divya Sethi, Faculty Coordinator, Placement Cell, to propose a formal vote of thanks. Over to you, ma'am.
Thank you, Shelima. Very good afternoon to one and all. It is my absolute privilege and pleasure to propose a vote of thanks and acknowledge the contribution of everybody who was involved. So I, Divya Sethi, on behalf of the Vivekananda School of Business Studies, VIPS, extend a heartfelt thanks to all our esteemed speakers, Professor Anurag Agnihotri, Professor Surendra Kumar, Mr. Anil Bajaj, Mr. Avdesh Nagar, and Dr. Vinay Kanpal. Thank you very much for sparing time from your busy schedules to come here and enlighten us with your profound knowledge. Thanks to you all, this discussion has brought so much clarity to all of us regarding this 2022 budget. And I am sure that everybody present here, the students as well as the faculty members, have immensely benefited from this insightful discussion on the budget. My heartfelt gratitude to all the speakers for gracing the occasion and sharing their opinions today. It has been such an honor to be a part of this wonderful panel discussion. Once again, thank you all. A special mention to our respected Dean Ma'am also, Dr. Indira Bhardwaj, for being the catalyst, that has always stimulated us to do our best and always standing as a pillar of our strength. Without her encouragement, this event would not have been possible at all. So thank you so much, ma'am. I would also like to take this opportunity to thank all the people, who have worked behind the scene to make this event happen. So a special mention to the students and the faculty of the placement team VSPS. Thank you all. And finally, I would like to thank all of you present here, respected faculty members and dear students, for making the time to be with us today and helping us make this event a great success. So thank you one and all. Privileged to be here, and over to you, Shelly ma'am now. Thank you.
Okay, thank you. Thank you so much, ma'am. And now I will request our Dean, ma'am, Dr. Indira Bhardwaj, ma'am, to virtually felicitate um, Dr. Vinay Khanpal.
Okay. This is to express our sincere gratitude to you, Dr. Khanpal. And we really look forward to having you on campus sometime and actually felicitating you in person.
Right. So I think this brings us to the end of such a wonderful session, and it has been a truly enlightening session for all of us. And a very, very heartfelt thanks to all the esteemed panelists and moderator sir as well. And I think that we have to thank our dean ma'am as well for taking things forward for all of us, and making the discussion even more interesting. And it is through her support that we are always able to move forward. And it has been such a good discussion for all of us. And again, it is our faculty members as well, and the students who have been so patient and put in such beautiful questions, making the discussion even more enriching. So with this, we come to the end of the entire discussion for the day. And thank you so much, everyone, again. And I think now we have in the chat box as well the feedback form for all the students. Please do make sure that you are filling in the feedback form, and that will also count in as an attendance for all the students who were present during the panel discussion for the day. Thank you so much, sir. Thank you. It's really been a wonderful experience for all of us. And from the entire VIPS fraternity, a very, very heartfelt thanks to you and all the other esteemed panelists. Due to shortage of time, they had to leave, but then it has been a wonderful experience. Thank you so much, everyone.
Thanks to the entire team for organizing it. And thank you, Dr. Khanpal, once again. And to all the student members of the placement cell who've been working a lot to get this event together. So thanks to all the faculty members for joining. And thanks to the team, Shelly and Divya, for taking on the responsibility. So it was indeed a very insightful session. So thanks to everybody. I would just say take good care of yourselves, and may God bless each one of you. And have a great day and a great weekend. Thank you so much.
Thanks, ma'am.
And I think the students who have filled in the feedback form, they can leave the meeting.